Hello, how do I analyze stocks charts for swing trading without moving averages? We have our watch list open and we are going to analyze two stocks here, PWR and ROL. So the first one is PWR and we are going to use Thinkorswim platform and we are going to use maximum daily chart. So when you look at Thinkorswim, we have one line that we color in purple and it is the support line passing by the higher lows of the charts. I like to call it the valley of the mountains, and we color it in purple to differentiate it from the other support lines that we trace, and it is our entry point. So we are watching the stock so that when it pull back to this support line and start going up from there, we can enter the trade by buying some shares. Today is October 22, 2025, and we are doing the analysis before the market opens today. But it closed yesterday on red. That's why the price is colored in red, and that just means that the price at the end of the day, at the closing of the market, was lower than the price in the morning when the markets open. However, the price, even though the price pulled back yesterday, the price is still higher up compared to where we want to buy. Therefore, it is not a buy today. We use long up to long swing trading strategy, and that is how we determine our entry point to our trades without using moving averages. And that is pretty much how I do my chart analysis. The price is higher compared to where I want to buy, is higher up, so therefore it is not a buy. When we are looking at PWR, we purchased it this year already, and I think we sold it a little bit early, but that is a learning lesson for us as well. But let's take a look at it closely. So we purchased it at this support line, which is a support line for the upside wall of the mountain. As the stock was climbing up, it pulled back to rest on that support line and then went higher up and so forth. So when it pulled back to it and start going up from there, after a few higher lows, we purchased some share. That's why you see a narrow there. So just a few or one higher low there, and we purchase it. And then it pulled back because it was not done. So it pulled back to the valley line, which indicates that this is not quite a valley line, or is a temporary one, or better yet, is a support line supporting the upside wall of the mountain. And it pulled back to the valley line. So when it reached the valley line and start going up there after one higher low, this red bar is higher. That's a pullback, is higher than this one. We purchased it again at the first green bar that followed that pullback. So when we purchased it, it went up for a while, pulled back to it again before it was ready to start going up. So we were quickly positive in this purchase. Probably we purchased it, the date is on the x-axis and the price on the y-axis. So we purchased it in March, a month. We were positive for within that month, but then for some days or some weeks we are negative, and then it start going up. So we can just say that, for 2-3 weeks or so we were negative in it. Oh, not much either, because even when it was going down here, the price is still higher up than what we pay for it. So, but when it pull all the way back down here, you can see that the corresponding price to my mouse was lower than this purchase here. So, but either way, at some point we were negative in it, at some point we are positive in it, buying it here. But you can see the mouse, where the mouse is, the price that is corresponding to it. All the candlestick below that line, we were negative those days. Anything above it, we were positive. So this entry, even though we entered quite early, we didn't stay in the trade long. It started going up and we were positive in this one, but we were negative in this first purchase up to where the candlestick were above this line. So around this area, we became positive in it shortly after it reached a new high. So when it reached a new high, we sold it. And my analogy on that is, so we pretty much discuss how we analyze the chart to swing trade without moving averages, and I'm just explaining how we purchase stocks without using moving averages. So now our exit plan to sell the stock, again without using moving averages, we use the next new high as a target point to sell the stock. So when we reach this, we could have, instead of selling it right away, that is, the arrow shows where we purchased, the one facing down shows where we sold. So instead of selling it like that, we could have stayed in the trade longer, but we didn't. And the reason why we didn't, if I remember, is, but first, the exit strategy here is, this was a new high, therefore we could have sold it, and that's what we did. That was the first strategy to exit the trade. The second one would be to compare the previous high. When it left that support line, the previous high started from somewhere here all the way to here. So you can see that once it reached the first new high, leaving that support line, it did it for a while, for over a year or so, but it will pull back to this secondary support line as it was climbing the mountain. The mountain needed support to stay up, right? And then it needed support for the downside as well. That will be the downtrend. So the uptrend side of the mountain needed support line, so it was pulling back to that support line. So I think the reason why I sold it early was because I purchased it at that support line, supporting the uptrend side of the mountain. I know that if he wants to use it as a support line moving forward, as it's claiming the new mountain, you know, the new circle, depending on how low it pull back, we could well become negative temporarily in this trade again before it will start going up. For that reason, I just decided to sell it, lock in that profit, and be done with it. But again, that was the second strategy. Determine how long that uptrend of the mountain lasts, and decided to stay in the trade for maybe half that time frame, just in case it does not exactly repeat that pattern. And then use the third strategy, which will be to quantify your exit by using the highest peak for this circle from this area to that peak and back to that same support line. Use the highest peak price divided by the lowest peak within that circle. So if we do that and then take that ratio and time it by the lowest peak for the new circle to determine the price around which you like to sell your stock. So if we take 364 as the highest peak there, 364 divided by 153, that gave us of a 4 or 3, 2.4 or 2.3. So that means you could easily double your money by staying in the trade alone. So now if we want to quantify the right time we could have stayed in the trade and sell it, we can use the smallest price. It will be 228 when I purchase it, 227 for this one. So we can use 227. So 227 times 2.3. So we can decide that, so because the previous time it was about a year that it continued to go up, creating higher highs. Okay, so it reached the first new high of this new cycle. Sell it as we did, or stay in the trade for at least 6 months, or when the price reach 522 or so, sell it. So that will be the exit strategy. Use those 3 strategies to determine the when to sell the stocks to be able to lock in the profit that you accumulated so far before the stock is ready to start going down. Because those stocks are large cap stocks that are upward, they are growth stocks, they reach new high, and those are all-time new highs, all-time highest price, because we are using maximum daily chart. Therefore, it's for all-time historical price. It's taken into consideration in my understanding. If you are using 1 year time frame, those new highs will be different. But because we are using all-time high, all-time maximum, we are using maximum daily chart, is pretty much the historical, the highest price in the history of this company after it went public. At least that's the way I understand it. But that is how we swing trade without using moving averages, but just trace our support line, passing by the obvious lows of the mountain, and decided that that's where we want to buy when it reach that support line and start going up. But again, it's good to compare that support line to the previous support, to compare the price behavior around that support line to the previous time it touched base with that support line, to see if it tends to remain at the support line for a while before leaving, so that we do not get in the trade too early. And it's okay to wait for a few higher lows around that support line, just to confirm it to yourself that it's done. Maybe it's done going down, it's getting ready to start going up, and then you can buy at the first or second green bar that follow a pullback, a higher pullback, but again it could still turn back on you and go below again as well. So you just need to take those into consideration. And that's what happened here when we thought this will be a point that it will go up from, just like the way it did it before. But clearly it was done with those claiming the mountain, and it started going down. So we remain in the trade. We didn't sell it at a loss, we just left it there because it's a large cap stock. It's not going to go bankrupt anytime soon, at least. So that was the understanding, and that's why it's important you swing trade good stocks, so that if you buy at a higher price, you just leave it in your portfolio until it becomes positive again, and you can sell it if you want to sell it, or stay longer in the trade before deciding to sell it. But yeah, so that is this one. So the next one we are going to analyze is ROL. So ROL, we didn't purchase it this year, and it has still been going up. We have 2 support lines that we color code to buy at when it pull back to it, but it has not come back to it just here. It's still going up, and yesterday the price went up. That's why it's green bar and green price highlight here as well. The price at the end of the day, at the closing of the market, was higher than the price in the morning when the markets open. So we have a red bar there. So we pretty much analyze the chart, paying attention to the red bar, which we call a pullback, a drop in price that day, and a green bar, a rise in price that day. And we pay attention to the lows of the chart by tracing support lines that to determine which lines that the price will fall back to when it's done with that trend and that circle after climbing the mountain and pulling back to the valley where we think it's going to pull back to and start going up again. We want to buy it there, and after it reaching new high, we like to sell it. So that is the strategy we use, and that's how we analyze chart without using moving averages. So we can take a look at PWR that we purchased and sold to see how we did with that trade. So PWR, and again ROL is too higher up compared to those support lines that we traced, therefore it's not a buy for us today either, based on the long optional swing trading strategy that we swing trade with. So PWR, we purchased it in February for $3.05 a share, and we purchased it again when it pulled back to that support line, start going up from there. In fact, it was about a month later for $2.50, about $45 different a share in those. And then we sold it, both of them in June for $3.52. And so those two, we made that profits to $2,900 from that profit. So the first one that we purchased at a higher price, we made about $900 profit from that because we sold it shortly after it reached a new high. And the second one, we made $2,000 profit there. So we have those profit rate, 15% for the first one and 40% return on the second one. So that is how we swing trade without moving averages, and we do our chart analysis without moving averages. I used a little bit in 2024 when I was swing trading using short optional swing trading strategy, but then after a while, when I know that I could swing trade without them, I took them off of my chart and I just used my support line to do my chart analysis and to purchase stocks even in 2024. And that's what I keep doing this year as well, analyzing my chart and swing trade without using moving averages. Thank you so much for your time. We thank you for watching our videos, and we thank you for all of your comments. Thank you for subscribing to our channel. I'm Afiabi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and in soap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money, just as small, and grow your account from there. Thank you for your time. For more of swing trading tips, will you please check the playlist in the description of this video. Thank you for your time.